Okay, let's get cracking, shall we? Okay, so far we have jumped into a section of the Golden Suite Forex Bible. We've covered topics such as charting with TradingView, which is now live on YouTube. We went through how to use TradingView, the main tools that I like to use, and basically, like everything I say of Forex, just keeping it simple. So we went through TradingView in episode 1. Episode 2 went through the Need to Know Forex Basics, just to give you a big background about Forex, especially for the beginners out there. Just to give you a bit more information and background knowledge. And then episode 3, very, very important, risk management, which is also live on YouTube. So if you haven't seen a risk management one, highly recommend watching that, because if your risk management strategy is good, and then your trading will definitely become more consistent, and you'll see the profits rolling in on the longer term, which is what we want. Okay, so risk management, you need to know your lot size, you need to know what percentage of your account you're risking. It's all part of a bigger picture. Are you going to be a guy that's going to move stop loss to entry, or are you going to be just letting trades completely set and forget? So you need to know what your personal plan is going to be. We also spoke about your strengths and weaknesses. Draw that column. For those of you who didn't screenshot the column, I have now compiled a booklet together. I'm going to send into the free channel so you can download that booklet and take it away with you. It's going to cover everything that I've taught you over the last 9 series and the 9 episodes and this episode today. So strengths, weaknesses, you need to recognize what you're good at and what you're bad at. Then the weaknesses you can turn into strengths by working on them, by setting a time slot aside every single day. So it's important that you can recognize the things you're not that good at. After that, we went through into trendline, candlestick pattern mastery, trendline identification, and plotting key and major zones. Now, this is where we're starting to get into the technical analysis side, where I showed you exactly what candlestick patterns to look for and when to use them and where not to use them. We also looked at trend lines, using the trend lines on the higher time frames as our guides, then going down to the lower time frames, using those trend lines to help us with entries, along with our minor support and resistance zones, and of course our major support and resistance zones. I had great feedback from those videos, so if you haven't watched them, please watch them. They're definitely going to help you with your Forex journey, 100%. They're going to give you that little bit of extra knowledge, or maybe just that little bit extra push. Then we'll unlock one little thing for you which can make a big difference. That seems to be the thing with Forex. I mean, I've taught hundreds and hundreds and hundreds of people, and it's just that one little tiny tweak which makes a massive difference to their Forex trading. It's unbelievable. Went through back testing and the importance of the double tops and the double bottoms, and we had a great back testing session as well. At the end of the session, we was in profit. We realized why we was in profit. One of the trades went wrong. We broke down why that went wrong. That one's going live on YouTube later today. So we went through all the back testing, why back testing is important, why we're waiting for these double taps, and of course we then linked up the support and resistance zones with the trend lines and with our candlestick patterns. It all glued together. So the back testing episode, which is episode 7, was the kind of the piece together everything that I've taught you so far. Then episode 8, we went into why confluences are essential, why we need to wait for those confluences, why we're waiting for double zones. We're not really looking to trade just off single zones. And then we went into, of course, a massive issue for Forex traders, or maybe I shouldn't say issue, but for a lot of people it is, especially when they begin. It's a psychology behind trading, being able to hold your trades, not closing trades in a little bit of profit, not over leveraging, not having fear of missing out. And it's all these aspects. Once you can control them and you understand the thought process that you're going through, that's when you're really going to start to see your Forex journey becoming 1, enjoyable, and 2, much more profitable. And that's what we're all here for, right? We want to enjoy the process as well. And then that brings us on to episode 10. Why most traders fail. And of course, a bit of a Q&A. So if you have any questions about any of the 9 episodes and today's episode, make sure you drop it in by using the chat function below. Then I'll be able to answer those questions as I go. So first of all, a big one. When is exhaustion complete? So I'm actually going to jump on the chart for this one. Perfect. So we are on GBP USD. Now, when is exhaustion complete? Now, a lot of people fail because they're getting in trades too early. Okay, they're getting in trades too early. Simple as that. Or even too late. Okay, they've already missed the move. So we need to know when exhaustion is complete. So I'm going to take you through five very simple ways to detect that exhaustion is complete. Some of it I taught you, some of it I have not taught you yet, but this is definitely going to help. So I'm going to go through, I'm going to find a lovely example, okay, a really nice example of ways that we can detect exhaustion is, of course, complete. So I'm just going to go back, see where we can find a really good standout example, all right, where it's very obvious, and then we can maybe go through and find some examples that aren't too obvious. Okay, first of all, I just really want you to understand exactly what I'm teaching you here, so I need to find a really good example. I've seen a couple, but see if I can find something a little bit more solid. That looks pretty good. No, we'll find a better one. We'll find a better one. I need to find something almost perfect. Then you're going to really understand what I'm trying to portray here. And then when you go away, you're really going to understand it. All right. So maybe I should have got this prepared, right? I don't like preparing the charts because I feel like it's not a great way of teaching. It's good to be raw. Just straight on the charts, jump into some backtests and jump into some plotting. But this, okay, this is looking pretty textbook. Okay, that's looking quite nice. Okay, so let's go back. Let's go replay. Okay, so I'll write this down as we go, but still take notes because this is going to be really beneficial now. I'm going to show some other examples, but I'm going to try and find a decent one. So we've got, first of all, an uptrend, right, coming through there, and then we've got this everything that I've taught you, by the way, so far. This level coming through here, okay? Perfect. So price has pushed up. Okay, we broke out of this level. We've come back to retest. Now, this isn't always obvious to a lot of people because they don't know what they're waiting for when price comes back. A lot of people get caught out. It's another reason why I showed this example here. This is where a lot of people get caught out. Price is pushed. It's pulled back. We've got a little engulfing candle and they're like, brilliant. The exhaustion's happened. I'm ready to go. That there is not a valid exhaustion. And how I determine that is by using 5 methods as a guide as much as I can. Now, these 5 methods will not always be present, but most of them will be. So first of all, when I'm looking at a push, I think, is this a valid exhaustion? No. The reason why that is because always expect a flag of some description. Now, I know this example, we haven't found a flag. That's what I was originally looking for. But I will find one in a minute. Always expect the flag. Okay, that's going to help you straight away think, yeah, that's not enough. That is not enough for an exhaustion. It really isn't, especially after a push like this. Okay, so always wait for a bit of structure. So let's get this written down. This is really going to help you, honestly. It really helps you know when to enter the trade at the best time possible. So wait for a flag or even a wedge. Okay, a flag or a wedge. Wait for a flag or a wedge. Second, we need to come back and retest this level here. So you want to see price come back and retest the previous level. If it's a double top, for example, you've had that double tap here. Remember we said about a double tap? So you've had a double tap like this. You've came up to your level twice. Something a bit like that. This nice level here. You've broken out of the lows. What do we want to see? Of course, we want to see price break out like this. And then we want to see price head straight back to retest this level here. Like that. We want to see break. We want to see price pull back. Okay. Very simple. This is basically structure neckline. This here is just resistance. Once price pulls back, it's going to act as support. So we keep it very simple. So already we've got 2 ways we want to detect exhaustion. One, we want to see some sort of flag, some sort of wedge. Okay, we want to see price start to trickle back We don't just want to see a little pullback like that, because what this is, you're still trying to catch this same move. Okay? Still trying to catch this same move. We don't want to catch this same move. We want to catch the next big move. That's what we want to catch. We don't want a continuation of this move. We want to catch the next big move. So already, is there a flag there or a wedge? No, there's not. Okay, so we're not going to enter a trade here just because we've got an engulfing candle. Secondly, have we come back to test this level? No, we haven't. So we're definitely not going to enter a trade. We've also got an uptrend here as a guide. Have we tested the uptrend? No, we haven't. So already we got retest of the old level which broke. Retest of a trend line. It could be uptrend or downtrend, depending on if you're bullish or bearish. And then have we got a flag, a continuational flag, or a reversal, or a wedge? In this case, it'd be continuational. No, we haven't. We haven't got any of those. Next, we want to look for EMAs. Now, I'll use two EMAs here, 15 and the 50. Have we come back to test my EMAs? Minimum the 15. We can go as far as the 50, minimum the 15. No, we haven't. So already, there's 4 no's. I'm definitely not looking to enter a trade here. And this is why so many people fail. Because I go, yeah, brilliant. We've pull back. I'm getting in here. Price comes back and takes them out. This is going to help you with your patience and your fear of missing out. It's really, really going to help. Lastly, Fibonacci. I haven't taught you this. You learn it if you jump on the Golden Suite 7-day free trial. There's a section there about Fibonacci. We're looking for minimum 382, okay, low to high, looking for minimum 382 fib. Have we hit minimum 382 fib? No, we have not. So none of our confluences at the moment, which help us detect the perfect exhaustion, have not been met. So we're not going to enter a trade. So let's write these down. Wait for a flag or wedge. 2, retest of support or resistance, okay? We'll see a retest. Retest of support and resistance. So this is resistance. We're going to retest it as support. 3. Is there a trend line there that we can use as a guide to help us detect our exhaustion? Remember, trend lines are just guides. Is there a trend line there to help us see how far price wants to pull back? In this case, yes, there is. 4. Looking at Fibonacci. Of course, 5. We can use the EMAs. Okay. This is 5 ways for you to detect your exhaustion. Wait for a flag or a wedge, retest support and resistance, trend line, fib, and of course EMAs. 5 ways. Works brilliantly, by the way. Brilliantly. So let's move forward. There we go. So you've entered here. You get excited. You broke the high. What's happened? You got a high test and the price is coming back down. I'll be looking for shorts up here. And the price is coming back. And of course, we're starting to see a rejection. We've come all the way back so far to 50% fib. We wanted to do 382 minimum. Brilliant. So that's qualified. Let's remove the Fibonacci. Perfect. Next up, we are looking at an entry. Brilliant. We've come back to our trend line roughly as a guide. Okay, trend line's around here somewhere. We've come back minimum to our 15 EMA tick. Is there a flag there? Not really, but we've come back quite nicely. And we've got our candlestick pattern there as well, ready to enter. So out of all these confluences, we've come back to retest the resistance of support. We've come back to hit the trend line. Okay, there or thereabouts. It's never going to be perfect. We've come back a minimum to the 15 EMA and we've come back to the Fibonacci. We haven't got the structure, which is absolutely fine. We don't need that. So now we've got these tweezer bottoms here, which would have been a great entry, or you can even take that engulfing candle. And then, sure enough, away price went. That would have been a TP trade. That's the sort of stuff that we're looking for to help us detect the correct exhaustion. It's really important because once you have these methods noted down, you're like, okay, great. I'm now becoming a lot more of a patient trader as well. Got something coming in the chat. Good question. So let's say you're in a trade and price starts moving more volatile up and down. Would you move your stop loss higher than anticipated to ensure you don't get stopped out or just take the loss? As soon as I enter a trade, I'm a 1% risk person. I'm fully committed to losing 1%. As crazy as that sounds, I'm fully prepared. 1% in, I do not care about 1%. That's why I truly believe that when I'm in a trade, I'm enjoying the process a lot more and I'm making good decisions because I'm fully prepared to lose that 1%. So if the trade started whipping up and down, price action started moving a little more quicker than anticipated, I'd leave the trade to run. If my stop loss gets hit, my stop loss is there for a reason. It's tucked behind a barrier. It's there for a reason. And if my stop loss gets taken out, I want to be out of that trade. So I would never move my stop loss. Only time I move my stop loss is around about 10 o'clock when the spreads get a bit high. Then I'll move it back. It's the only time I ever move my stop. So good question, but no. Stop loss is there for a reason. We need to commit to that. Once you start moving your stop loss, how far do you go? You know, how long are you going to keep moving it for? That's the problem with this. A lot of people have learned that the hard way. I certainly did. You keep moving it, it's going to come back, it's going to come back. It doesn't always come back. So we need to be fully prepared when we enter a trade. That's why it's important that we understand risk management and we can say to ourselves, I'm fully committed and prepared. If this trade hits my stop loss, it's not a problem for me. And that's the mindset you need to be in. So this would have been a great trade, but a stop loss tucked behind barriers, which is going to be another point I want to get onto in a minute. So I'll find one more example of detecting exhaustion. And then what we're going to do, we're going to jump into the next point of why most traders fail. Hopefully that can, of course, help you guys and girls improve. So let's find another example. Moving along. Okay, so let's take a look here at the moment. We've got a bit of a level coming through here. I think we can all agree. We've had a few touches there. We've came back. We've come back again. We broke the level. We've came back here. Bit of a double top there as well. As we can see, just coming through here. Okay. Bit of a double tap. Obviously, we're not looking at the high time frames at the moment. This could have been a downtrend, for example, on the high time frames that we've shown a double rejection of, etc. Okay, we've broken out. We're pulling back. Great. Now, what can we use as our guide? Well, first of all, is there a trend line there that we can use as our guide? Yes, there is. So let's go back on the replay. Cool. So now, out of our confluences, what has or has not been met? So wait for a flag or a wedge. Well, here we have got a little bit of a bit of structure there. It's not the most cleanest wedge or a flag by any means. If anything, we've got a bit of an expanding structure, which is a continuational pattern. Something a bit like this, okay? Just get rid of those arrows. Expanding structures are generally continuation, which we've got there. A bit like this. Perfect. So yeah, we have got some sort of continuational pattern there. Okay, so that's a tick one. Have we got a retest of the support and resistance? Well, yes, we have. We've got this really nice spike. And then, of course, we've shown a bit of rejection. So yes, we can tick that one off. Is there a trend line? Yes. 1, 2, 3. Fourth touch of a trend line. Perfect. This is shaping up lovely. Fibonacci. Take a look at our fib like this. Come all the way up. A little bit further than what I like, but still prices pulled all the way back and closed back below 50%. I'm happy with that. And the EMAs. Yes, we've come up and we've tested as far as the 50 EMA. Look like a good trade, right? Confidences have been met. Let's go for a short. You know, I'll go about 10 pips above the high. We're looking for, make sure I get that right, 41. Will we stay in or not? 1 to 2 is what we're looking for. We know she pops back up, so let's see what happens. Generally, I'm around about 10 pips just above the high. Seems to work pretty good. So just how I like to trade, just my personal preference. So we drop into a little bit of profit there. And then boom, we finally drop down. We pop back up just a little bit and we drop back down. And this is a great example of why you need to back test, because when you're trading in real time, you want more than anything for price just to drop straight into profit. That's what you want to see. It's not always the case. Price can come back up once again and then drop, or can come back 3, 4, 5 times, then drop. So you need to be fully aware that when you're back testing, what it actually took for price to hit your target. So again, another great confluence met, then price dropped. Good example again, right? We've had a breakout, all the confluences are met there to detect our exhaustion. This isn't a confluences to find a trade, this is a confluence to detect exhaustion. Okay, so I hope that makes sense. Any questions on that before I move on to the next point, why most traders fail? This one is obviously because they're not waiting for the correct exhaustion. For example here, let me just show you when not a good time to enter this trade would have been. Okay, so here we have got wait for a flag or a wedge. But yeah, I mean, we have got a little bit of structure here, right? All depends how you want to draw it out. If you want to go out to the wicks, you can do. But a bit of an expanding structure there. We know it's a bit of a continuation. It's not great by any means. You could draw it more like this. You could bring it in a bit and say, okay, it's a bit more of a flag, you know, something a bit like that. It's neither here or there, okay? There is some sort of structure brewing up, right? We've got these nice wicks. We've got these tweezer tops. Perfect, okay. Have we got a retest of support and resistance? No. Has it retested the trend line? No. What fib is it? Great. We're looking for minimum 382. Not hit 382. Okay. Has it come back to the EMA? Yes, it's come back to 1. So flag or wedge, yes. Retest of structure, no. Retest of the trend line, no. Is there a fib? No. Is there EMAs? Yes. Okay, so out of 5, we've got 3 no's. We're not going to enter that trade. You see how important this is, how much it's going to help you. Because that there looks like a decent trade, right? But it's not. And when I'm inside the Golden Suite, people are like, Ron, I see you waiting for this trade. It looks pretty good to enter now. And I'm like, I'm going to wait for one more push. And they say to me, how did you know that was going to happen? It's because I'm using this guide. I'm using this guide to help me. That's all I've done. Just created a system which I believe works really well. I think failure can turn on a profitable trader on the time if you're willing to learn and learn from mistakes. What do you think as an experienced trader? Because everyone starts from somewhere, right? Yeah, I mean, I've failed. I still fail now, okay? You're never going to be 100% perfect when it comes to trading. But what I love about failure in this game is that you learn your lesson really quick because failure costs money. Failure costs money in Forex. So if you're not doing things right, it's costing you money because you're losing. So you learn very quickly, and it's the mistakes which mold you into that profitable trader. That's so right. And you can only make these mistakes by obviously start trading. But if by showing you the mistakes that I've made and trying to give you the correct information, this can help you eliminate those mistakes from when you start. I mean, I'm self-taught. Imagine how many mistakes I make. And I still make mistakes now. I'm never going to be perfect. But that's why I love this game, because you're always learning. You're always getting better and better and better. And that's why it's important to obtain as much knowledge with Forex as humanly possible. And that's just why I love it. I learn something new. No word of lie. Every single day, I learn something new. No matter how small and insignificant it may seem, I always learn something new. Whether that's something specific about a currency pair that I've been backtesting more, you know, about the characteristics, or maybe seeing a little bit of a different entry technique, or just there's always something every single day that when I'm in the charts, I notice something different. So yeah, failure is what will help you become better. But if I can avoid you making the same mistakes as what I did by giving you this information now, then you're going to become successful a lot quicker, and it's going to cut down that learning curve. Okay, next up, we're going to stop the screen share. Okay, any questions about that before we move on? So if you haven't screenshotted that, you should have. This will be on YouTube, so you can go back onto it. But that little system that I've got, those 5 things, helps massively. Now, they're not going to catch every single trade. No technique, no strategy ever will catch every single trade. You really need to accept that. I accepted it a long time ago. But by sticking with something which works most of the time, even if it's 80% of the time, okay, if something is 8% of the time, you're on to a good thing. You've got to keep inputting that into the charts all the time. Inputting that in, inputting that in. Okay, next, we've gone through this throughout psychology, is over leveraging. Massive reason why people are failing is because of that get rich quick mindset. They start off with a small account, which everybody should start off with a small account, because you don't even know if you can trade. So first we need to prove to yourself you can trade, right? And then everyone starts to over leverage. But I don't want to tarnish everyone with the same brush, but the majority of people, some of you that are listening, I'd imagine you've done it as well, you over leverage. You want to get those big wins. Why? because it's more money, and also it feels good. Okay, it feels good if you get a big win. Of course it does. But you shouldn't be thinking about over-leveraging and about making money. You should think about one very important thing. Become the best trader that you can possibly be. If you focus on that, the money will just follow. I promise you. Just focus on being the best you can be. Enjoy the process. And as cliche as it sounds, honestly, it all just falls into place. Because whilst you're practicing on your small account and you're focusing on the best you can be, you're now becoming consistent at trading, which means you can go to try and get a funded account from the FTMO or an equal company to that. That's why it's so important. Just regardless if you've got a £100 account, £500 account, £1,000 account, it doesn't matter. Start off small. Just focus on being the absolute best that you can be. That's your number one priority. Then the consistency will follow, and then the money will just come. All the time people are trying to get rich quick. They're just blowing accounts, which means you're just blowing opportunity after opportunity after opportunity. And you're just elongating your own journey, your own process. You're making it so much longer than what it has to be and so much more stressful and painful. And it really doesn't have to be. All right, so just practice, back test, small account, even demo account. But I personally think that small account with real money, because it's your money, is the best way to learn, because you'll learn psychology with real money as well. So no over leveraging, all right? It's going to fuck you up. I promise you. You don't need to. You can get funded. You can get funded now. You don't need to. This is like listening to my journey before the Golden Suite. Real money comes emotions. Mate, it does. But once you start learning with real money, and then you're prepared, and then you start building up your account. I mean, I've had people that have taken my freedom asking. I said, like, look, I've got X amount saved up. I'm getting good now. Do you reckon I should just put all that in? I'm like, whoa, no. You're used to trading, say, let's say, for argument's sake, a 5k account. You don't want to be chucking 50 in. Your psychological trading brain at the moment is not used to seeing them sort of figures moving up and down. Start adding bits periodically. In terms of fund, adding it periodically and let it build up so your mindset can get used to seeing these numbers moving up and down, these larger amounts. Because if you go from 5k to 50k, as soon as you enter a trade at 50k, your spread would be your usual stop loss size. You'll be like, whoa, you're not ready to handle that. So add funds slowly, and then your emotions, you'll become more numb to them and in control. Next up, so stop loss placement. Now, your stop loss has to be placed behind barriers. Really, really important. So let's go back on the screen share. Okay, back on the screen share. Your stop has to be placed behind barriers. Okay. These barriers can be behind EMA. It can be behind support / resistance. It can be trend line, etc., etc. Say previous highs and lows, that's basically support and resistance. So you can get, these are the three main barriers that we come across. This here is a perfect example. So price moved up, confluences has been met. Where do we want our stop loss here? Well, we know where we want it. We're definitely not going to be going, but if I get a really tight stop, I'll just move it there, and then I can get down here, I can get a nice 1 to 4. No. You need to ask yourself, where can I put my stop loss? Well, I can put it behind the EMA. Perfect. There's one barrier. Behind the trend line. Perfect. Above this last high. And also above this really nice old support, which is now resistance. Perfect. You got your stop loss in a great place. That's why I always wait for the exhaustion. And yes, sometimes I may wait too long, but I'd rather wait and get a much better entry than risk getting in down here too soon and just getting stopped out for the sake of it, just because I didn't wait. So it's really important. Stop loss behind barriers. And when you wait for this exhaustion, it's so easy to get your stop loss behind those barriers. So easy. Really important. Stop loss has to be tucked behind barriers. That way it's harder for price to get there. You don't want your stop loss just in the middle of nowhere, because price can just pop back up and take you straight out. Always behind barriers all the time. And obviously take profit would be in front of the barriers. So if there was, for example, you was taking a short, I'll just show you a quick example now. Say you took a short from here. There's no reason to, but I'm just going to show you an example. Let's say we had all confidence in making a take a long, sorry. you wouldn't have your TP up there above this zone, above the trend line, above the EMA. You'd have your TP before it. Why? Because it's an easier target to hit. So stop loss behind barriers, TP in front. Because you want the TP to hit easy. You don't want to make it a hard job for your TP to hit. Okay, everyone got that? So far, exhaustion, over leveraging, and stop loss behind barriers. 3 very important ways in which you can stop Forex failure and become a better trader. 4 is impulse trading. We've been through this. We touched on it slightly in psychology. Now, impulse trading is where you do get wrapped up in your emotions. Maybe a bit of panic sets in. You're rushing and you just go and place a trade because you think the trade's going to go without you. First of all, who gives a shit if the trade goes without you? Who cares? Let it go without you. There's going to be another trade. Thousands, hundreds of thousands of other trades in your life, if not millions. So do not get so consumed and emotionally attached just to one trade. That's where you get sucked into this little Forex bubble. You need to pop that bubble, get out of it. If you feel like you're rushing, you're panicking, you've got to unlock your phone. Oh, should I enter, should I not enter? You're impulse trading. You've answered your own question. As soon as you ask yourself that, should I enter this or not? It looks okay. And then you see you want to go for a long and the candle pops up a bit. You're, long, because you're being influenced now. You're impulsively trading. Don't do that. 100%. That's like just as bad as over leveraging. Imagine being over leveraging and impulse trading at the same time. You're screwed. So impulse trading is when you're ill prepared. You haven't done your proper analysis. You're questioning yourself whether you should take this trade or not. You're worried because you've got that fear of missing out. So you're worried about missing the trade. As soon as you feel these emotions, you're asking yourself these questions, do not even enter the trade. Step back, let it go. And 9 times out of 10, it would come back and it would have took you out anyway. It always happens with the impulse trades. So impulse trading, a massive no-no. Next is chasing money, not percentages. Now, you shouldn't be chasing anything with Forex. As I previously said, you should just be focused on becoming the best trader that you can be. However, too many people are focused on the monetary value. So looking at the money in their account, they're looking at the money, and they're just following that. They're opening and closing trades because they're looking at the financial aspects, which I understand because most of us are here to make more money. So why would you not be looking at the financial aspect of your account whilst the trade's going up and down? But believe it or not, that doesn't work. You need to be looking at the percentages. What percentage am I making? What percentage loss am I willing to accept, etc., etc. So you need to focus on percentages and not money. Massive mindset mistake there. Once you start looking at your account as a percentage instrument instead of a monetary instrument, the emotions do fall away, and then your trading all starts to become so much better. Honestly, all these little tips here are all helping you just make things black and white, remove the emotional aspect, and it's give you that little edge over the market where you can just continue to execute and make profitable trades. So, no chasing money. Bad choice. All right. Think about percentages, really important. And lastly, so we've gone through money exhaustion is complete, over leveraging, stop loss placement, really important, is behind barriers, impulse trading, so being ill prepared and panicking and entering a trade because you got fear of missing out, and then chasing the money and not percentages. So lastly, it's really important that you go away and you have a really honest chat with yourself and you write down any weaknesses you feel that you've got right now, which is holding you back from being the best version of you as a Forex trader. You need to go away from this episode now and straight away just grab some pen, grab some paper, and just write down what you think is fucking you up. What's getting in your way? And you might think, well, actually, I'm doing all right at the minute. But there's always something. If it's just one thing that you need to work on, you need to go away now, write that down. This is what I'm bad at. This is what's holding me back from progressing from here to here. Then once you get up to here, there'll be something else you got to battle with. There's always a little battle going on all the time. And you've got to keep winning these battles. And then you keep getting better and better and better. So as soon as you get off this webinar, because we're about to come to an end now, make sure, while it's fresh in your head, pen on paper, write it down, and that's what you're going to work on. And that's the one thing which is getting in your way from you moving on and progressing and become the best version of you as a Forex trader. Any questions before we end this webinar? Before we shut down? We have some good questions come through about failure, and obviously failure will help us progress, which is really important. We need that. And yes, with more money, there will become more emotions, but not if you slowly build up to that. Okay, not if you slowly build up to that. We know the videos going on YouTube. There's some going on now as we speak. Got a member of the team working on that now. Literally, they're being uploaded. And they'll be, if not all today, they're all going to be done by tomorrow morning. But they're all uploading as we speak. This one will be edited once I get off. And then you can watch all 10 episodes. So make sure you like and subscribe to the YouTube channel. You can watch all 10 episodes on there. And yeah, really hope this little mini seasons help, these little mini episodes. And carry on trading, stay confident, make the right decisions, and remain emotionless. Take care, everyone.